Hello traders. New video, new review. Today, we're analyzing the MAD Turtle MT4 signal from MQL5, an EA showing impressive performance with over 200 sales per month. In this review, we'll dive deep into its strategy, performance, and potential risks or suspicious behavior. Our question: is it really worth the price, or just hype? And we'll even plot the signal's trades directly on our charts to clearly visualize every entry and exit. First, we'll download their trade history into our Excel Pro Trading Analytics template. We'll choose the MT4 signal, since it has enough trade history and at least 12 weeks of data. The MT5 version, on the other hand, is still new, with limited data and only a small initial deposit. The initial deposit for this account is $6,000, and it trades gold exclusively through the WellTrade Forex and CFD's retail broker. Before downloading the trading history, I recommend checking the warning displayed on the MQL5 signal page. In this case, no trading activity detected on the signals account for the last 10 days. Also check what's new and reviews and other tabs. After downloading the data and uploading it to the template, first review your data. Check the total number of trades, then update the other columns with a simple click. In version 1.7, you now have the option to export this data and visualize it directly on your chart, display many symbols and compare many traders' signals and more, just like we demonstrated in our previous video. In the dashboard, we'll focus only on the key metrics and look for anything unusual or abnormal to keep the video concise, but on your side, you can take your time to analyze everything in more detail. The win rate and performance are good, too many trades or over trading is abnormal, the max drawdown of 9% is okay. "47 days of trading, with too many frequent trades and 98% of them are buy orders. This is like a go long strategy, or maybe it use moving average long period, so this trading period is bullish for gold." The cost impact ratio looks good. This could be due to the broker's low commissions or tight spreads. Keep in mind that many traders copy signals using different brokers, which can lead to slightly different results compared to the signal provider. To achieve the most accurate replication, make sure to use the same broker server and ideally the same VPS setup as the provider. He opened only 2 trades in July, so it barely counts. Even if he opens 100 trades next month, the performance would still be small. His best performance came in September, despite over-trading. In October, activity slowed, but even with some over-trading, performance is still good. This is the best 10 trades, all of them are long and with increased lot size. The average lot used most time is 0.01 lot. The same for worst 10 trades, increased lot size came with profits and risks. Let's check the scorecard system. As we noted before, there are monthly and daily over-trading warnings. Even though the trading style is swing trading, this level of activity is abnormal. If it were scalping, it would be acceptable, but for a swing strategy, it's unusual. For the account summary, all metrics look good. However, consistency, which is very important for long-term evaluation, is not strong. We will consider it fair. Unlike most prop firms that only check lot size consistency, our script analyzes consistency across profits, volume, holding time, and drawdown. Now, analyzing the profit curve, including stagnation and drawdown periods, the overall shape looks good. However, this is mainly due to frequent winning trades covering losses. We observed 2 notable drawdowns, one in late August, trades 185 to 213, and another from trade 1065 onward. Profit stagnation is also evident in the first month, with only 1.83% profit for the first 100 trades. The max drawdown is 9%, so it's okay for this trading style. Profits versus losses look good. There are no large losses that could wipe out multiple profits, unlike many other signals we've analyzed. Let's move on to the filters and chart section. Here we can activate or deactivate filters, choose the range period, select symbols, and filter by order type, wins, losses, and more. This allows us to analyze profits, the best performing times, periods of high signal activity, and other performance details. I will focus only on the important observations about this signal. First, The average risk-reward ratio is 1.4, which is low for a swing trading style but acceptable for scalping. A positive point is that the signal uses regular, fixed stop loss and take profit, which are displayed in MT4 signals, but not in MT5. Many traders use trailing stops, but we did not observe this in the signal. There is also no partial close, so the lot size used should be the smallest possible. The best holding time showing good results is between 2 and 8 hours. We observed 82 trades held for more than a day, which is unusual. We will need to confirm if these trades trigger a floating drawdown warning. For the entries, there doesn't seem to be any preference. The signal trades across all hours and sessions, with slightly higher activity at the start of the New York session. The same for the P&L, there doesn't seem to be any preference. The signal shows profits across most traded hours and sessions, with slightly higher profits at the start of the New York session and some losses at 6 a.m. and 16 p.m. Regarding consistency, after analyzing many signals and backtest histories, we can quickly identify what is normal versus abnormal, consistent versus inconsistent, and understand why. We can also detect potentially suspicious strategies. This is a valuable lesson for traders. By carefully observing the market and analyzing data, even small patterns or behaviors can reveal future trading opportunities. This insight comes from quantitative analysis and systematic trading. Now, let's go back to the dashboard and scan for any suspect behavior. With just one click, you can get a complete suspect trading behavior summary. 932 suspicious trading patterns detected. In the summary, we have 5 different warnings for potentially suspect trading strategies: multiple entry detection, martingale, grid averaging, hedging, and floating drawdown. We observed many multiple entry detection warnings, in pink, occurring within the same minute. This indicates that the EA opens multiple orders simultaneously at the same level or very close to it. We can see this more clearly on the chart: periods of floating drawdown followed by closures with small profits, which indicate recovery attempts and similar behavior. Now let's move on to the chart. We've already explained how to export and display the data and reviewed all the settings of our trade visualizer indicator in the previous video. As you can see, we've plotted only the gold trades from the signal and added notes highlighting the detected suspicious behaviors. Now, let's zoom in to examine the entries and exits with additional details. Before that, I'll briefly explain the grid averaging strategy, which is frequently used in the signal. Consider a bearish trend where the market moves against the initial trade. The first buy order, or multiple orders at the same level, is opened. If the market continues to drop, typically by about 500 points or $5, the EA keeps opening additional buy orders against the trend. As a result, you'll see many losing trades kept open until the market eventually moves back up. If it doesn't, losses continue to grow as more trades are opened, which can eventually lead to a margin call, especially on smaller accounts. Sometimes, you'll notice an even riskier situation, where the EA increases the lot size using a martingale approach, while also averaging down through a hedging strategy. All these types of strategies are prohibited by most prop firms. Even if you pass the challenge, you'll likely receive a warning or face account termination. This is an example of grid averaging: the market go down in lower time frame and the EA keep open by orders in difference levels. This is an example of martingale strategy with grid averaging: the market go down in lower time frame and the EA keep open by orders in difference levels with increased lot size from 0.01 to 0.02. Many trades are opened simultaneously, even when the previous ones haven't been closed yet. In the exit tooltip, you can see the profit displayed in dollars, pips, and ROI, return on capital, along with the exit time. This is an example of a hedging strategy, where the expert advisor opens both buy and sell orders simultaneously. In this case, it's not just one buy order, there are multiple, and the EA continues adding sell orders against the trend. And the entry tooltip, we added the position ID, allowing you to easily check the trade details in the trade sheet, such as take profit, TP, stop loss, SL, risk-reward ratio, and drawdown. Such strategies can be profitable if executed very carefully and professionally, but as observed here, having too many trades open at the same time on different levels is not a good practice for professional or long-term trading. It mainly results in higher commissions and costs for the broker, reducing overall efficiency. Many buy trades were opened during a ranging period. After that, the price broke below and moved downward, resulting in many losing trades. Some of the trades were closed with profits, but the losing trades had larger stop losses than take profits, leading to an unfavorable risk-reward balance. Again, we can observe hedging and grid averaging behavior. The second sell trade represents what's known as pyramiding, where additional positions are opened in the direction of the winning trades. However, when the market moves against these positions, it erases the unsecured profits, not protected by a trailing stop, and can even result in significant losses upon closure. Some trades remain open even when important news events are approaching. Look at the trading frequency of this EA. We've revealed the strategies used, the suspect behaviors, and the results behind them. So, the question is it worth the price or not? Many novice traders focus only on the overall performance, but they don't measure the risk involved or consider whether it's suitable for their capital and risk tolerance. Finally, to answer one of the most frequently asked questions about our template, your purchase includes all future updates, and yes, you can run the utility on up to 10 different computers with a single purchase. Buy once. Analyze forever. Thanks for watching.